If four things are followed, having a great aim, acquiring knowledge, hard work, and perseverance, then anything can be achieved. APJ Abdul Kalam. Well, my friends, every day your hard work is 10 to 15 minutes of following these charts. The perseverance part, every day. Acquiring knowledge, that is what you acquire by on-the-job training. And having a great aim, that is knowing that you want to accurately follow price movement. You learn by doing, by practice trading, by taking the videos that we send you every day. They're in your show notes with special trainings for you. And again, practicing this. And the nicest thing about it is, it's fun. I love it. I do it every day. I do it here for you for free. So stick with us. You can master this. Don't worry about how long it takes. Why? Because once you master the charts, my friends, you've got it made. Once you can accurately predict price movement, just imagine the world is your oyster. It doesn't cost you anything but your devotion, your time, your energy, which is, of course, everything. But 10 to 15 minutes, that's all we ask. Let's jump into these charts. Stocks and bonds down, gold up, Bitcoin, depending on which chart you look at, up or down. We'll talk about that in a minute. Let's get to the S&P 500 down 1.75%. We look at this weekly candle, boom, it is a heading down. When we look at the low for the week, 421.35, the low in the last down week, the big down week, 420.76. So we're not quite there, but we are heading back in the down territory. Price percent oscillator, derivative oscillator heading down. Big red down candle, no wick on top. Like last week, we had a little wick on top and a big wick on the bottom. Well, a big down candle wick on the bottom. Look at our two-day charts, just stacking up, heading down. Price percent oscillator, derivative oscillator, negative, gaining downward momentum. Half-day chart, just trundling down. In fact, even down more in the afternoon, slowing down a little bit in the morning and then hammering on down in the afternoon. Lots of downward movement and downward pressure. So that is where we are. That is where we continue to be. We had a little bit of a reprieve there the week ending the 4th of February and the 11th of February. And then it started all up again. So lots of downward pressure, lots of stuff going on in the world, lots of uncertainty. Whew! The Nasdaq 100 down 2.56%. And again, a big red down candle, lower low than this prior low on the week ending the 28th of January. Price percent oscillator heading down. Derivative oscillator is about flat. Red down candle. We look at the two-day. Just stacking up, price percent oscillator gaining down, heading down, derivative oscillator gaining downward momentum. And we look at the half day and boom, just heading on down, waiting for some good news to try to recover at some point. But as these things unwind, as world issues affect the market, it ain't looking good, friends, but we'll follow the market. There's always stuff to do. Like what? Well, we've been in a down move on the Nasdaq 100 since it crossed over going down on our weekly chart all the way back in early December. Went down for 3 weeks, popped up for a week, and been going, then down 4 weeks, sideways a little bit on the week ending February the 4th, and then rolling back over again. We had that 2-day recross after we had that week going up that popped us out in late December, and then it all started up again with that 2-day recross. Those of you who've been short the whole time, been beautiful, hadn't it? Now, again, a little bit of sophistication, you can figure out how to make money in your practice trades when the market's going up or down. We have inverse funds like PSQ. What does it do? PSQ, it moves in the opposite direction of the Nasdaq 100, and it has been going up. Have you been practice trading it? Have you gotten good and have you bought maybe a share or two just to see what it's like to jump in and jump out of that? Well, it's been rocketing. And again, it's all there each and every day for you to practice trade and work on 10 to 15 minutes. That's all it takes. Bonds down 1.38%. We have a solid green candle, little wick on top. What does this mean? It's a slowdown in the down movement. Things are still heading down, but not reaching a lower low. That price percent oscillator tracking down, derivative oscillator negative and flat 2-day. You can see where we had those two-day candles never penetrating the 2-day trend line and now heading down again. Price percent oscillator flat, derivative oscillator losing downward momentum. We see that candle sitting right there on that 2-day trend line. Let's call it that. What do we see on the half day? Well, we had a few days of some up movement, dying on the vine, really pushing right up yesterday. That was Tuesday afternoon, penetrating with the wick, the weekly pushing through on the 2-day. This is the half-day chart, and then dropping back through it on Wednesday morning and further down in the afternoon. Derivative oscillator still positive, losing momentum. Price percent oscillator still positive, heading down a little less than flat. Now, let's go to gold. Gold, it's the little engine that could. Up again today, 0.45%. Check it out. Nice to see green up candles gathering strength as gold pushes up. Price percent oscillator heading up. Derivative oscillator heading up. Nice to see. We look on this 2-day, just continuing to push on a little higher. Candles are getting smaller, but they keep moving up. Price well above the weekly and the 2-day trend lines. Remember when we had that 2-day recross back on Monday the 14th? Did you jump in then? Have you been riding that up? It's been beautiful on that practice trade. I did. What do we see on the half-day chart? Well, we can see where gold just continues to slowly but inexorably push up. It is weakening some. That price percent oscillator is now flat. Derivative oscillators losing some momentum. So keep your eye on gold, and we'll see where it continues to move. Like I said, up for the day, 0.45%. Now let's talk about Bitcoin. Going to go back to our weekly chart. We look at the New York Stock Exchange Bitcoin Index up 1.81% for the day. Now we look at Bitcoin Grayscale Bitcoin Trust down 1.16%. We look at our Bitcoin ETFs, they're all down 0.76% for BITO, for BTF down 0.68%, and for XBTF down 0.7%. This was the ETF that I did my practice trade on. I did a fractional trade on this last week, and it was easy. Worked out great. It's an ETF, acts like a stock. So again, if you're going to do any fractional trading, what is it, around $37 a share? You can buy a share, see how good you are. Realize losses will very easily be incurred, so you could lose $37, okay? But not doubtful you'd hopefully not lose that much, no matter how bad a trade or how new you might be. But again, if you're new, practice trade for a while. But when you think you've got it down, fractional trading keeps you honest because the pennies stack up. If you start using real money in large amounts, that's gambling. That's against our rules, and you're just going to get hammered. The market will be happy to take it from you. All that being said, we see that the New York Stock Exchange Bitcoin Index is up some for the day. Everything else is down. Now, we've talked before in the past about how this is measured. The New York Stock Exchange has its own ways of calculating all these things. What really matters is if you look at the charts, look how similar they look. You see a red down candle having been preceded by a spinning top, previously in a green up candle. So again, oops, I'm getting out of the Bitcoin charts there. That was the cryptocurrency chart, all top 10. But you see that all those, and that's really what we're looking for, is just making sure that we're accurately following price movement. What do you see here? You see lots of downward pressure still. Price percent oscillator, which had been flat, heading down again. Derivative oscillator losing downward momentum, still negative 2-day. Again, heading back over, going down, still positive, but price percent oscillator heading down. Derivative oscillator positive, losing upward momentum. Half day, again, down many days, has flattened over the course of this last day. This is the Bitcoin chart. If we look at the New York Stock Exchange Bitcoin chart, if we look at the Van Eck Bitcoin Strategy ETF, this is the futures chart, you can see where things were sliding sideways in the morning, green spinning top, and then over in the afternoon. So what does this mean for us? It means Bitcoin isn't anything we're jumping in right now. Lots of downward pressure on Bitcoin, and we're going to wait for things to settle out. Who wants to jump into something and get hammered? There's no reasonable puts that you can jump into on Bitcoin. We'll just wait. And the whole crypto market, for those of you who are Patreon members, just sent out to you before I recorded today's show, Charting Crypto. That'll come out to everybody else later, but what you will learn from that is still lots of downward pressure in the entire crypto market. Not a time to be jumping in unless you want to lose. So that is where we are, folks, as we end the day this midweek. Great training for subscribers on backtracking. Very important training. So I would encourage you to take that if you're a subscriber. If you're not a subscriber, subscribe. It's free. We also welcome all of our new I almost said Bitcoin members, all of our new Patreon members. Thank you so much. We appreciate you being with us and supporting us. And of course, that crypto training just went out. Tomorrow night, I will be recording for you and sending out 20 weekly vertical crossovers for you to take a look at. Find a couple to practice trade on Friday. You want any of that information, plus the Options Made Simple, the Charting Wealth Way, all the special trainings that we have. Those are all available to our Patreon members. And of course, with the new month coming, we'll have the live question answer call-in session next week. So thank you so much for being with us. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.